Bitcoin has fallen sharply below $98,000, sending shockwaves through the global crypto market and raising alarms among traders, analysts, and long-term investors. The sudden drop marks one of the steepest declines in recent months and has pushed the wider digital asset market into a deeper correction phase. The move is being described as a broad market flush that has wiped out heavily leveraged positions across exchanges. The decline began during overnight trading when large volumes of sell orders hit the market, breaking Bitcoin below the 100,000 level. Once that support failed, automatic liquidations surged. In the past 24 hours alone, more than $880 million in bullish bets have been liquidated, forcing traders out of positions and accelerating the downside momentum. Ethereum, Solana and Cardano each dropped around 8% as the selling spread across major altcoins. Analysts point to several factors behind the fall. One of the main triggers is fading confidence that interest rates will be cut soon. Traders had been expecting a more supportive central bank environment, but recent economic data has suggested policy will remain tight for longer. This shift has pushed investors away from risk assets, and Bitcoin is feeling the impact directly. Another key factor is the rush of institutional money leaving crypto funds and exchange-traded products. Several major digital asset funds reported outflows this week, indicating that professional investors are stepping back and reducing exposure. Combined with falling market liquidity, this created conditions where even moderate selling could cause sharp downward pressure. Technical traders also note that Bitcoin breaking below 98,000 is a critical signal. It triggered stop-loss orders and forced selling on several platforms. Once those orders began to execute, the price drop intensified and created a cycle of fast liquidation that pushed Bitcoin even lower. Traders are now watching the 95,000 region as the next possible support. Despite the sell-off, some analysts believe this decline could help reset overheated positions and set the stage for a more stable recovery later. Historically, Bitcoin has often bounced back after large liquidation events. However, the current environment feels different because other risk markets are also under pressure. Stocks, tech shares, and high-growth assets have all faced selling, showing this is part of a broader risk-off shift. For everyday investors, today's drop is a reminder of how quickly crypto markets can move. A single day can erase billions in market value and reshape sentiment across the entire sector. Whether this marks the start of a longer downturn or a temporary shakeout will depend on how Bitcoin behaves in the coming days. For now, traders are waiting to see if buyers step in to defend key support zones. If they do not, the market could face another leg down. Bitcoin's next moves will determine whether confidence stabilizes or fear grows. The only certainty is that volatility is not going anywhere.